Hello, everyone. I hope all of you are doing great. I am Noor Haidar, and I'm a research associate at MAGNiTT. Thank you for registering for the webinar and for joining us here today as we see how the global and MENA VC ecosystem have fared in recent years. If you have any questions, please feel free to drop them in the Q&A box, and I will be getting to them at the end. To start off, I want to go over the agenda for today's webinar. We'll see how different or similar the global and MENA VC ecosystem have performed in light of the recent economic developments. For the global funding and deal numbers, I've taken data from CB Insights. We'll also see how the leading industry, which is fintech, has evolved over the past few years, and what does the future look like for the industry. I will also be sharing the M&A how the M&A deals have performed in the first quarter of the year. And then at the end, I will be telling you about how MAGNiTT's data can be of use to you. And then, of course, we'll be moving on to any questions that you might have. So before we begin, I would just like to highlight that MAGNiTT is a data analytics platform for verified venture capital data across the Middle East, Africa, Pakistan, and Turkey. And moving forwards, we are also expanding into Southeast Asia, and the data for which will be available by the end of in the second half of this year. So to start off, I kind of want to give an overview of the ecosystem and see some of the political and economic developments that came about in recent years. So 2020 was the year of the pandemic, and we saw a major shift in how the world kind of moved towards digitization, and this wave of digitization came about in the industries of fintech, e-commerce, or even delivery. And as a result of this, we saw that the VC ecosystem peaked in 2021. We'll be looking at the numbers shortly. After 2021, and as we moved into 2022, we saw that the dynamics kind of started changing. We had the Russia-Ukraine war. The world was still dealing with the aftermath of the lingering effects of the pandemic, the inflation, the rising interest rates, and the stock market correction that happened. And as we moved into 2023, the economic slowdown was kind of in full effect. And to kind of add to that, we also had the SVB collapse and the Credit Suisse failure. So starting off with 2021, we know that it was a record year for venture capital. And looking at the global funding numbers, we can see that there was an increase of 111% from 294 billion in 2020 to 621 billion in 2021. And if you look at the MENA region, it was kind of similar, though, of course, on a much smaller scale, as funding increased by 170% and deals declined by 24%. And we also had multiple mega rounds that raised close to $1 billion. Moving into 2022, we started seeing the first signs of economic slowdown. It was in March that the Fed raised interest rates for the first time since 2022, and throughout the year, Fed would continue to increase interest rates, and the impact of which we would be seeing on the VC ecosystem when we go through the numbers. However, the number story for global funding and MENA funding is is a little different. I'll show you more in the next slide. Here we can see that after consistently rising for 5 quarters, funding dipped in the first quarter of 2022 by 17%, and deals though had depleted at the end of Q4, but they kind of recovered in Q1 2022. When we move on to the MENA region, we can see that unlike what we saw in global funding, the decline here is almost negligible, and the numbers are kind of flat. If we disregard the very slight difference that we see at the top, then we see that non-mega deal funding, which is shown here in purple, which is shown here in purple, and we can see, which is shown here in purple, and this funding is basically from rounds that are less than $100 million, and we can see that it actually increased by 30% compared to Q4. So the decline actually came from mega deals. Q4 had Kitobi's 300 million, and Q1 had 110 million from cryptocurrency startup Rain. So Q1 was likely, it is clear that Q1 was carrying the impact of the high that we saw in 2021, which is why we did not see a very significant decline. And if we talk about the deals, then there is the factor of the lag between the closing of the deals and when the deals are announced. So it is likely that deals that were closed at the end of Q4 were announced in the first quarter of 2022. If you look at the cumulative data, then the impact of the economic slowdown is as evident as ever. From Q1 to Q4, deals and funding declined by 3% and funding declined by 56%. The year was particularly turbulent owing to a number of economic factors, and even though the stock market started declining at the beginning of the year, like in January, but when the Russia-Ukraine conflict happened, the fears of energy disruption became more apparent, and global markets were also impacted by the fears of economic recession. On a year-on-year basis, after a record high in 2021, funding declined by 35%, while deals pretty much remained on the same level as 2021. However, almost 30% of the deals came from the first quarter, and much of the deal decline that happened was reflected in the subsequent 3 quarters. In MENA, the more obvious impact of the market cooldown came from second quarter and onwards. In Q2, deals declined by 21%, while funding only declined by 9%. This was largely due to the cushion that was provided by the 2 mega rounds that were closed in the second quarter. If you remove the impact of these 100 million plus rounds, funding almost declined by 40%. And if you look at Q3, we can see that it turned out to be the lowest quarter, which is usually the case in MENA, and I'll be talking more about it later. Q4 saw a slight recovery both in funding and deals. In comparison to the global numbers from Q1 to Q4, funding declined by 8%, which is very different from what we saw in the global funding slide. And it was largely due to the 7 mega rounds that rounded over $1 billion in funding. However, again, removing the impact of the mega rounds, funding is in line with what we saw globally, as it fell by 40% from the start of the year towards the end. These mega rounds were also the reason that the average round size in MENA was inflated from 4.9 to 5.8, unlike globally where the average deal size dropped to 16.8 million from 24.7 in 2021. Moving into 2023, we knew that it was going to be a challenging year with the constant interest rate hikes and inflation. IMF projected that growth was to fall to 2.8% from 3.4% in 2022. And it was kind of a rocky start too, since at the beginning, in the first quarter, we had the Silicon Valley Bank collapse. And in the VC ecosystem, it was likely that investors would be more cautious about where they deploy their funds. And as the startups were just learning to adapt to the changing economic environment. So for global funding and deals, the downward descent continued for the 5th consecutive quarter, even though there were big deals like USA-based Stripe that closed the $6.5 billion deal. And if you look at the MENA numbers, while the chart here suggests that MENA saw an incline in funding moving into 2023, but we need to take into account the 3 mega deals that were closed in the first quarter of the year. If you remove the impact of these rounds, then non-mega deal funding declined by 32% in the first quarter, and the deals carried a more obvious impact of the global economic downturn as they recorded a decline of 30% on a quarter-on-quarter basis. Talking so much about mega rounds, we see their impact aside from the non-mega deal funding in global numbers. Quarterly data shows that 2022 saw a very obvious decline from the first quarter to the fourth quarter, but however, still in Q1 also the funding, the decline was apparent, and it was the lowest quarter in funding since 2020, which was 3 years ago. If you talk about MENA mega rounds, then the start of the year for MENA was very happening. There was the LEAP conference, and in February, Holland, the fintech in Egypt, announced that it had raised $260 million in funding. And from the LEAP conference also came funding announcement frenzy, where we also saw Nana, KSA-based startup Nana, and Floward announced their mega rounds. And so together, the three mega rounds upscaled the funding to 549 million, which is equal to the last 2 quarters combined. These three mega rounds that were closed in a single quarter is also the highest for MENA region in 1 quarter. Now, obviously, if we're talking about the impact of the mega rounds, we talk about the global median round size in late stage and also early stage and mid stage. If we look at the global numbers, then median round size for late stage fell drastically. However, an interesting factor over here is that the median size for late stage was lower than the median size of the mid stage rounds. The sharp decline kind of implies that outlier rounds at these stages are now changing, and there is more happening in the smaller size deals. What is interesting with this decline is that it would be interesting to track that if round sizes will shrink back to the pre-pandemic levels. In MENA, the round size decline is kind of similar. After Series B peaked in 2022, it has declined in 2021 and 2023, but obviously we only currently have data from the first quarter. Now, if we do a comparison of the different regions globally, then it would further validate what we've been talking about, that the global economic downturn is in full swing. If you see here, all the major regions have seen a decline in funding, while the decline in funding for USA is just 1% here, but we need to take into account that this is largely due to the multi-billion-dollar deal that was recorded by Stripe. And if we talk about the emerging venture markets, as we call them, we can see MENA and Africa recorded slight increases in funding. But again, I would reiterate that this was due to the mega rounds that they closed. Next up, we have fintech. Fintech has been the leading industry for quite a while now, both globally and in the MENA region. But the start of the year did not happen very good for the financial sector, as the collapse of the Silicon Valley Bank happened. And if you look at the numbers, global funding over here, we can see that it saw an incline of 55%. But again, this was only due to the 6.5 billion deal closed by Stripe. If the impact of this deal is removed, then the funding amount has not been this low, at least in the previous 3 years. At least in the previous 3 years since like 2020. And if we look at the deals, then the decline is very obvious, as from over 1,600 deals to Q1 last year, they have now depleted to 983 deals. Fintech in MENA is kind of interesting in a way that the deals have declined in the first quarter, we can see, but even though they made a slight recovery in Q4, however, the funding incline that we can see here is again due to the mega round that was closed by Holland. And if we remove the impact of the mega round, then the funding has actually declined by 40%. With the changing dynamics for fintech and also the environmental economic factors taking into account, we see that investors have been focusing on early stage, which has been happening for the past few years as well. But at a time like this, when inflated valuations are dropping and the market is uncertain overall, investors are focusing on early stage rounds, as it is evident here. Globally, the deal share for early stage rounds went up to 72%, which is a record high for global numbers. And if we look at the MENA numbers, then we saw an incline in Q1 to where it reached 89%, a number that we previously saw in 2019. Now, at the start of the year, we talked a lot about, or at the end of 2022, we talked a lot about how 2023 was going to be the year of exits. And this kind of was true for fintech. As you can see here, that globally fintech M&As made a comeback as they increased by 15%, and they recorded 172 exits in the first quarter of the year. However, if you look at the MENA numbers, while year-on-year increase is apparent that there has been a year-on-year increase, though quarterly data would not give us much as the data is sparse considering that MENA ecosystem is relatively nascent. So M&A activity in MENA, you can see that there's a stark difference from eight. There isn't much difference as 8 deals were closed in 2022, and this year in the first quarter 2 deals have closed, which is like 20% of what we saw last year. However, an important factor to note here is that cross-pollination is a major theme in M&As that we see in the MENA region, whether it is international players entering into the MENA region or MENA-based startups acquiring a startup from outside the region. As this year too, we saw Luxembourg-based CrossSwitch, which acquired a Morocco-based startup called Vantage Payment System. Now, talking about the opportunities and challenges for fintech. Despite the many challenges, the opportunities for fintech also remain at par. The major reason, or I would say the major value proposition for fintech is that it offers the ease of banking that it offers, which is major for emerging markets like Africa or like Egypt, Pakistan, and all these countries where the majority of the population is unbanked or underbanked, and with the increasing internet penetration and how these countries have a bulging youth demographic. So fintech offers the opportunity to bank their population, and also the portfolio of fintech has been expanding, like from alternative payments. Now we are starting to see insurtech startups or investments going into blockchain, and especially with the interest in AI and machine learning, there is a lot of potential for the future of fintech. And secondly, when we look at deals like Holland or Stripe and how investors are deploying funds in startups, it bodes well for our future as well. And also when we see that early stage deals are also going very strong. So clearly there is interest in fintech, and there would be more opportunities in the future. But at the same time, we cannot ignore the challenges for fintech as well, considering the high interest rates, the competition in the market, because the market is growing saturated as more and more startups come up. So it would be difficult for them to raise funds at a time like this. Moreover, with the latest banking fiasco, there may be a pullback in subsectors like banking as they kind of revisit how to make money and achieve profitability. So while there are opportunities for fintech, as we move forwards, there are also challenges that need to be considered. Finally, if we come to the M&A activity that has happened over the first quarter, we see that despite the talks that we had about 2023 being the year of being along the same lines as 2022 was in terms of exits owing to a correction in valuations, the challenges of raising funds in an environment of higher interest rates, it was likely that startups would be left with few choices aside from consolidation or acquisition as an alternative to fundraising. However, M&A activity in global and as well as the MENA region had a lukewarm start in Q1. It could be potentially due to the fact that acquirers don't want to make deals at a time when the cost of capital keeps increasing, and rising interest rates are not much help either. And startups would likely want to focus on profitability instead of expansion or acquiring other startups. Moreover, with valuations being down, startups would not want to make deals at a lower cost. So if we look at the numbers from MENA and we compare it with Q1 of last year, we see that we had 18 exits. And this year, we only had 11 exits. So this was almost a 40% decline that we saw. And interestingly, in the MENA region, 10 out of these 11 exits came from the UAE, while one was from Morocco, where we saw that a Luxembourg-based startup acquired a Morocco-based startup. So what's next for the MENA region? Q1 is over and we are almost at the end of Q2. coming up in July are our reports that are our quarterly reports for the first half of the year and for Q2. But if we look at this chart, this is a chart that is available on our analytics platform. On advanced analytics that is on our platform, you can see here that Q3 is all in red, or has been all in red for MENA in the past 5 years. This is because summer tends to be a slow time for MENA, and for the past few years, the month of Ramadan has been falling in Q3, which could also be or a reason for this decline, because what we have been observing is that while deals may be closing or deals might be under talks during this time, but there are fewer and fewer announcements that we see. So moving into Q3, it is Q3, I think we would expect more of the same, because considering that the interest rates are still rising and the inflation is still going on, so any chance of recovery that might be there, we would expect to see it in Q4 and not before that. Q4, I say Q4 because it is in the MENA region, at least, it is the season of conferences. We see a lot of funding announcement happening. There's also GITEC, so conferences like this, as we saw that LEAP also had a number of funding announcements come up. So any recovery that we are expecting to see for the MENA region would happen in Q4. That is it for the comparison between global and MENA VC regions. If you have any questions, please feel free to drop them in the Q&A box. I would just quickly walk you through how MAGNiTT can be of help to you. Using the MAGNiTT's directories and the various filters that it offers, you can see startups that are in different regions, the industries, how much funding they have raised, the investors in those rounds, and if you want to visualize the startups that you're filtering on our platform, you can also reach out to us for custom-made market maps. And you can see here that we have different startups in different regions. There's UAE, Nigeria, KSA. So other regions are on the platform, other countries are on the platform. You can get your own market maps customized by reaching out to our sales team. Then we have the analytics feature, which includes market sizing, deal size analysis. You can benchmark geographies against each other. You can benchmark investors against each other. You can see exit analysis. Then in market sizing, you can also kind of do predictive analysis where you can see the seasonal funding growth and predict that what the next quarter is going to be like. Then this is some clients, this is a feature for us that some of our clients use, access data on demand through our API and integrate the data that you need with our tools. Again, you can reach out to our sales team at sales@magnitt.com and they would be happy to help you. That was it for the webinar. I hope that you found it insightful, and I'm open to any questions that you might have. Okay, so we have a question, and they're asking that if you remove all the mega deals across the years, would the trends still hold? All right, that's an interesting question. I would just go back to show you how, sorry. Okay, if we look here, before 2021, the funding, even the mega deal funding and the normal amount of funding was pretty much on par. But when we move into 2022 and also the first quarter, that is when the impact, it shows that trend is pretty much the same, even if we remove the mega rounds, which is the trend of decline. However, in 2021, the mega rounds and as well as the normal funding amounts was inflated. So it wouldn't make much of a difference. And if we look at the current numbers, even then, and we remove the impact of the mega round, then we see how significant the decline has been. Okay, I'll just hold the floor. Okay, so we have a question. Do we have a sense of which sectors are attracting the most amount of funding by region versus global? Should we all be pushing money into fintechs? If so, what are the hotspots? There are, in the MENA region especially, there are industries that have been raising funding, like e-commerce was among the top sectors, then transport and delivery. However, since 2022, the trend has kind of shifted and we see more of a focus on fintech. And because despite the declines that we are seeing, fintech is still the industry that is garnering the most amount of funding, gathering the most amount of deals. And I think in terms of innovation, technological innovation, fintech holds a lot of potential because of the solutions that it can offer. And globally as well, we are now seeing fintechs incorporating AI technologies or machine learning technologies. So I think for the time being, or at least for now, fintech seems like the industry which is promising. But globally, we haven't seen that trend right now. In MENA, globally, AI is an industry that is gathering a lot of investor interest. So AI is the one industry that we could watch out for. I'll just wait to see if there are any other questions. Right, I guess no more questions. Thank you so much for joining us today for the webinar. It will be available for you on our platform and on YouTube for you to watch later if you want to. And if you have any questions at all, you can reach out to me. You can reach out to our sales team. And thank you so much for joining us today again. And have a beautiful evening.